All right. What is going on, future me? Hope all is well. Wanna, put together a pre-market plan as with every week for this coming week. And just to jump straight into it, we do have the dollar pulled up, the daily for the Dixie pulled up on the screen. And with that, as we can currently see, right, something that I outlined in my previous pre-market plan is that we might be getting a small bounce back into two areas of interest potentially. That first being 102.50, and then that second being 103 sort of 50 area, and then of course that third being the ultimate sort of like bounce or break level around 105, sort of 105.50 area. With that, right, we did get like a small bounce. There was originally a trending, like a descending channel that I had right. I think it was like right here, and we did break out of that channel, just right back into another one. As far as I'm concerned, this is kind of a forming a descending triangle as it currently stands. As we can see as well, dollar is still pretty weak. Not really making too much of this bounce from the 101 support. I would need to see a play into 102 and a reclaim of that level to really change my tone around seeing a further retracement. As far as news is concerned, we do have PCE coming out on Friday. Also, advanced GDP on Thursday, stuff like that. Durable goods, nothing super crazy. Consumer confidence Tuesday as well. And so, kind of biggest thing for me would be the PCE numbers. They did come in a little bit hot, and that resulted in a pop for the dollar when it did come out last month. And so with that, especially with seeing how the CPI numbers printed, I believe at like 5%, dropping a little bit below the forecast, I would expect the PCE numbers to do something similar, resulting in further dollar downside. Obviously, I don't have a crystal ball, so I'm just going to monitor these things as they come. But especially with the way the dollar is looking as it currently stands, and just structurally overall, it is looking like we're going to see continued dollar downside. Although, as I mentioned in my previous pre-market plan, this is a perfect time for the dollar to start retracing, especially with the way that gold is looking and everything else, losing, a couple different levels, and I'll get into that when I cover gold. But just as far as the dollar is concerned, when we look at the weekly, right, look at how weak this most recent weekly candle close is, right? Huge wick to the upside, rejecting a move back up, especially with the weakness that we saw to end the week last week, excuse me. And I feel that especially with the drivers, the economic drivers that we have coming out, definitely could act as a catalyst for volatility to the downside. Once again, highlighting the fact that we did get softer CPI numbers when they printed a couple weeks back, or was it last week? I'm not too sure. Actually, let's check. I believe that was last week. Everything's like a blur. Let's see. No, that was GBP CPI. Let's see. Yeah, 2 weeks ago. Excuse me. And so with that, right? Especially since we had these softer CPI numbers last week, or rather 2 weeks ago. Excuse me. It's late. It's like 5:30 a.m. I would expect softer PCE numbers as well, but obviously I can't control that. We're going to be monitoring it into the coming week. But as you know, just technically speaking, the way that the chart is looking, it is looking like we're going to see further downside, especially if we lose that 101 level, that the area of support that we're holding as it stands, like 101.25, 101 sort of 50 area. If we lose that level, definitely further downside confirmed, at least for me, into the 199 sort of areas. Obviously, we have a pretty well-defined level of structure here as well. So, I mean, if we were going to bounce, it'd probably be from that level, especially since we've already lost 103. So overall, of the sentiment that we're going to remain bearish on the dollar, at least personally, I'll be remaining bearish on the dollar and wanting to wait for gold to find stability on the chart to get long. When we look at this on the monthly, definitely adds a bit more context. 5 days left in the month, and I do want to highlight that that PCE numbers are coming out the 28th to basically end the month off, and so that could be electric, right, for this monthly candle and this move into 199 potentially. As I mentioned on the weekly chart, this is a very well-defined level of structure, as we can currently see with this little box, this little level of liquidity here, this level of resistance that turned into support, this whole thing. And so if we were going to make a move to the downside, it would be a move into this particular box, this area. As we've seen, it's held as not only resistance, but we've blasted through it. And if we were going to use it again, it would have to be acting as support. So either way, it's kind of programmed that we move into 100. Obviously wanting to look towards the weekly and daily levels for added context, because again, all of it stems from losing this particular level at 101. Because obviously looking left below 101, there's not a ton of traffic. And so I'll be monitoring that into the coming week. Again, I am still bearish on the dollar. I obviously have the descending triangle here as well. If we were to move down and break the 101.50 area, that brings us measured move straight into 99, that 199 sort of area. And so that definitely adds a bit of context as far as what we should be expecting if we do see further downside on the dollar. Once again, most recent weekly candle close is not convincing whatsoever, looking extremely weak. And so with that, especially with the drivers that we have coming out this week, I would expect further dollar downside. Obviously going to want to monitor the numbers and the prints that come out for, consumer confidence, PCE, and advanced GDP, all these different catalysts. Hope that makes sense. And so as far as JPYBasket is concerned, we have seen further downside for JPYBasket as we can currently see on the weekly. I did mention in my previous pre-market plan that this breakdown is not confirmed. This double top is not confirmed until we lose this range mid, and that's exactly what we did. Not this week, but the previous week, and now we're just confirming that with a little doji candle here. Looking back, right, we did have a very similar experience around February, where we had this little doji candle print after huge downside momentum and then reclaiming that range mid. Obviously, if we do something similar, I'll change my tone a bit. But as it currently stands, especially with the amount of momentum, I mean, you can see the difference in the candles here as well. The amount of momentum that we broke down through this range mid with confirms, at least for me, especially with the pattern acting in confluence here, this big level of resistance, the double top. I would be expecting further downside for JPYBasket. The monetary policy statement is being released this week as well, so it's always a very big deal. As far as when it's going to be released, it's always tentative. I would say between like 9 p.m. Eastern and 12 a.m. They always like to surprise the market with their reports and this whole thing. They'll do a press conference and everything else. So I'll be looking out for that on Thursday into Friday. Obviously that being Thursday evening until like 12 a.m. type of thing. But with that, as far as the Bank of Japan is concerned, right, they have not really changed their tone around their monetary policy and wanting to continue to, use quantitative easing to what they think is their advantage to print more money, buy more bonds. I believe like 70-80% of Japan's GDP now is like stemming from all of their bond purchases and everything else. So that sounds nuts. They're still, printing negative rates and everything else. So obviously, as the yen inflates and everything else, and they funnel all that money into the bonds, into their bond market, they're now sacrificing. I've said this millions of times, but they're sacrificing their currency as a result, and that's what we can see on the chart here, right? Like permanent downside as we can currently see, and as far as Japan is concerned, the Bank of Japan and their governors and everything else, they do say that they benefit from a weak yen. And so we'll run with it, right? As far as that's concerned, technically speaking, we do have this double top. Measure move takes us straight into the range low. And so that adds a ton of context, right? Super simple, nothing super complicated. It's just what the chart is giving us, right? And so with that, especially with the monetary policy statement coming out this week, obviously going to be an explosive move regardless of which direction. But I am leaning towards the downside for the yen. This will actually acts pretty well in confluence with where the pound is at the moment as well. Let me move this so we can have more chart space. Now get into that in a moment. Obviously the monthly is looking like shit. 5 days left in the month, as I mentioned, the dollar. We already had the 618 rejection, and obviously the descending channel rejection as well. So the only thing left to do is to go down. if we're being all the way up front, right? And so that's exactly what I'll be expecting into the coming week. We can take a look at the daily here as well. Something that I outlined in my analysis prior to this recording is that we do have another descending channel, very fickle descending channel here as well. There is a chance that we move back into the 8,000 level for a retest and move lower. This local fib also adds a bit of context to that, so I wouldn't be surprised if we saw something something in line with the retracement into the 8,000 level before a knockback, especially with the kind of rounded bottom that we're seeing here, especially looking left, right? Like this level at 77.60 typically holds as support, and wanting to see that broken into the coming weeks if we're going to remain bearish. Obviously, other side of that would be the retest and move into 8,000 before the continued downside. Because as we can currently see, right, we're having a shift, a full shift in structure. We had the big push up, we had the sideways sort of accumulation and consolidation, and now we're breaking back down. We need to obviously lose the last local low to confirm that, at least from a daily time frame perspective. But obviously, looking at higher time frames, it's looking pretty bad for the yen, or at least as far as yen strength is concerned. So once again, same with the dollar, right? I am still of a bearish sentiment when it comes to the yen. And that's great because when we look at the pound, we're starting to see a little bit of momentum gain, not on the weekly so much, but on the daily. Something that I did mention in my previous pre-market plan is that, where are we? We ended the week last week on this big bearish candle. And I mentioned that, you know, if we reclaim levels below 124, obviously going to play a level to level into 122 and everything else. Or the other side of that, like, perfect world would be building a base on top of 124 to make that move up into other range levels as far as like 126 and all these other things, get the sort of triple bottom measured move and everything else. And it does look like it is shaping up just a bit. I don't want to get super excited or anything of that sort of jump for joy, because we do have this very fickle channel here as well that we just broke through. And so again, as I mentioned in my previous pre-market plan, I'm going to want to see price build a base on top of 124 prior to making a move up. Otherwise, this is just a channel break and move lower. As far as GBP news, nothing super crazy if I'm not mistaken. There's actually no GBP news other than what is it, like small GBP news if I'm not mistaken. Yeah, like MPC member broadband. Nothing super crazy. Yeah, so more so a JPY and DXY centered sort of week. And so once again, as far as I'm concerned, this is bullish for the pound, just because, again, looking left, as we can see, we had a level of resistance, another level of resistance. We had a big run up, you know, small knockback, and now we're claiming that level above 124 and starting to build a base. Although we got knocked back with this big candle, this big engulfing candle to the downside, we ended up reclaiming 124, and we're trying to form a base on top of that particular level of structure. And so again, of the sentiment that if we start to build a base on top of this, we are making a very good case for a bounce into 126, which of course, seeing yen weakness, we're going to want to see GBP strength. We're going to want to see decoupled movement between those two indexes to make sure that GJ is trending. And so looking at it from the weekly time frame, we still have that, you know, inverse head and shoulders that's not, you know, fully broken out just yet. We did, you know, move past this local level around 124 as well. But as I mentioned in my previous pre-market plan, this is still a level of resistance, a very well-respected level of structure in confluence with the 618 and everything else, printing very weak candles, not a ton of momentum at these levels. And so I'm going to be wanting to aim more towards intraday, or not intraday, but daily time frames as well, to see how this shapes out, just because, again, I need to see price form a base, turn resistance into support before making a move higher. When we look at this on a monthly, nothing super crazy, not a ton of context added just yet. Obviously, we'd like to see this wick fill out and close solid body to end the month off. But anything can happen. I'm not necessarily looking towards the monthly this particular week for any sort of indicators or anything of that sort. I'm more so concerned with how the actual candle closes, and that'll be much more apparent to me looking at the daily and weekly time frames. Once again, either we build a base on top of 124 or we reclaim levels below it. Obviously, if we reclaim levels below, we'd be moving back into 122. And there's, again, not a ton of GBP news this week, so we're just going to have to see how this plays out. We can even look at the quarterly. Quarterly doesn't look too bad. It's still looking like a little reclaim, but again, I'm still wanting to see how this monthly candle fills out into this coming week. Hope that makes sense. Once again, just to kind of sum it up, wanting to see price build a base on top of 124. We broke the local highs. The only thing left next to do is to move into 126, unless we break back down. So with that, let's go ahead and move into the pairs I will be trading this week. GJ looking really interesting, right? We're at a very pivotal level. Like, I feel like I say this all the time, but this time I'm for real. We're at a very important level of resistance as it currently stands. As you can see, right, this big yellow sort of circle, all these big red arrows and everything else, indicating that this level is a very significant level of resistance, and we should be treating it as such. Also in confluence with the 618 and the 786. We also saw the most recent weekly candle close push into this level and reject 168. Very clean rejection, might I add. And so, as far as I'm concerned, into this coming week, I am going to want to see 168 retested. We're at a very important level in that we have the 168 resistance and now the 166 support. I'm bullish above 166 all day, every day. Like, I would be stupid not to take longs above above 166. Excuse me. But if we do break 166, it's looking pretty dire for longs on GJ, right? Let me go ahead and get into the daily, adds a ton more context. And so I feel like I've covered this a ton of times as well. When we have these sort of structures, I mentioned last week we had the this sort of double top, right? And we were like, oh, awesome. We might be getting a reversal. Wrong, right? We got the higher high, and now we have a higher low. Another higher high is printed at 168. And naturally, we would want to see the higher low formed, right? The best place for me, at least, to see that higher low formed will be building a base on top of 166. As we can currently see, as we broke into 166 last week, we built a base on top of it, made the move into 168, and now we're retesting the 166 area, making it now a very important level of structure. And I mean, I don't need to say that, because obviously looking left, it's been used as support as well as resistance in the past. And so I wouldn't be surprised if we start consolidating and bouncing between 166 and 168 before making a definitive move to the up or downside. But just to be all the way clear, 166 is a bouncer break level for me. Failure to create stability will equal a shift in structure, right? I mean, obviously I would have to, and obviously I would confirm a move to 164 and 162 for me. Reason being is because we have we have the level of resistance now turned into support. We have these two very local levels of, again, resistance now turned into support. If we break back below and reclaim those levels, for me, that is going to be looking extremely bearish, and I will be treating it as such and trading it as such. Looking at it on the 4 hour always becomes a ton clearer. And as far as I'm concerned, once again, I'm looking for confirmed sells below 166. Anything in between this is just noise for me. We do have a potential head and shoulders here as well. Local 618, swing high to swing low. And I do want to just mention that 167 is a pivotal level in itself. Looking left, this has been used as a stopping point and a big level of resistance many, many times, support and resistance. And as we can see, right, when we make big moves into 167, we either power straight through, and then on the other side of that, when we're moving back to the downside, we break and retest that level to move lower. So typically when we're moving through 167, a big move is coming, right? Unless we get some crazy consolidation similar to this, in which case I would be waiting to see where price wants to fall. And I can continue to look left, right? Like, this is, it's extremely apparent that 167 is a very important stopping point. So I'm going to want to watch for any potential rejections, which is, again, one of the reasons why I'm pointing out that this is a potential head and shoulders. Excuse me. I also had a channel here. I think it was, I had a channel placed right here, because we did have this potential ascending triangle that basically broke out, faked out, and moved back lower. And one could say, right, like, oh, like, we broke that level of structure, it's over with. But there is another channel here as well, in confluence with each area that price has bounced from. So for me, obviously seeing the more recent 4 hour candle closes, we do have a lot of momentum into 167. I'm going to want to, again, monitor and see how we react to the 618 and 167 level overall. Because, again, as I just mentioned, it is a very important stopping point for either a break and retest, move lower, or just to power straight through and making another move into 168. Something I do want to add as well, we have not had confirmed breakouts or breakdowns without the actual touch of 168, like looking left, right? Every time we've broken down, we have at least wicked 168 every single time, outside of this instance, and then there might be another one in this instance here as well. There's just sort of like a lower high, but other than that, I mean, we have more situations and scenarios where we have made the move into 168 before the confirmed breakdown than not, right? So I do want to take that into consideration, and again, 167 is a big level for me. As far as I'm concerned, once again, I'm bullish above 166. So unless we break down from 166, I am not going to be taking shorts. It would be great to tag the top, but I mean, I'd rather have a higher probability setup than just chasing it. And so, once again, the 1 hour always adds a ton more context, and as well, it also adds a bit more conviction in what I'm saying around 167 being a pivotal level. Looking left, as we can see when we were playing this last week, very clean, very good looking ascending triangle, very clean break. I was actually asleep for this when GBP CPI came out. It's insane move into 168 before the rejection, and we're now seeing the breakdown. And so once again, we rejected it once, twice, and then we broke out from 167. What I would like to see in a bullish scenario is a building of a base on top of 167 and a move higher into 168. With that, we also have the levels at 166, which I would consider. And there's also a very big level of support here at 165 sort of 50. I would not be taking sells from 166 into 165. I would be going into obviously the 1 hour, lower time frames, everything else, and waiting for the sell, or rather the break and retest of 165.50 to confirm the breakdown and to get into sells. Because as we can see, there's not a ton of traffic below 165.50, and I can even fib this out as well. Like, this is the fib I have in the 4 hour. Getting pretty close to the 618 here as well. We can take a look at it from the more local levels. We have a 786 here, level of resistance. And so once again, I'm either one of two scenarios, waiting for price to build a base. There is a rounded top here as well, so I don't want to necessarily like call it super early as far as a bounce is concerned from 167 area. There's also a local fib here as well at 166 in confluence with the 618 here. So we could definitely see one of two scenarios: building the base on top of 166 sort of 80, 167 sort of area and moving into 168, or what would be a bit more practical, would be the break retest on top of 166 before the move higher. Outside of that, I would only be taking shorts on confirmed breakdowns, of 165.50. As we can see, once again, we have bounced from this level time and time again. So why would I sell, at 166 into 165 for a 50 pip move when I would just wait for the confirmed breakdown below 165? Other than that, once again, I'm waiting for longs. And just to cover my plan from last week, because I executed it perfectly, it called it perfectly, everything else, I was waiting for price to squeeze, and as we can see, ugly consolidation, absolutely disgusting. I mentioned that a confirmed breakout would be at 167 sort of area. As we can see, looking left, it is a local level of resistance, and that's exactly what happened, right? We broke back above 166, broke retest, and started to squeeze into 167 before the news acted as a catalyst to break out into 167. And so once again, being that it is a very big local level, I would not be surprised if this sort of range mid between the 166 range low and the 168 range high acted as a base and as a new level of support before making the move into 168. So once again, just to kind of sum it for GJ and be clear for my future self, 3 scenarios, 2 of which are bullish, 1 of which is bearish. The first 2, either we build a base on top of 166, 80, 167 sort of area and make the move higher into 168, Or the more practical sort of approach, more methodical and patient approach would be to wait for the, obviously we have the break here, now the retest on top of 166, and then a move higher. Outside of that, the bearish scenario for me, if we break 166, that is confirming, that's gonna kind of, I guess, perk me up, pause, to the idea of getting into sells. And then what would confirm it for me is the breakdown at 165.50. I would want to get into sells on a break and retest of 165.50 all day, every day. If not, I'm pussy. And so with that, right, bullish scenario makes a little bit more sense just because we do have the JPY monetary policy statement being released. And as we know, they're going to continue to print money until, until I don't know when. That's just what they're on right now. And so that makes a case for obviously yen weakness, and all we would need to see is GBP strength, as I covered in the indexes. So a bullish scenario does make a little bit more sense, but once again, the bearish one would only be confirmed on the breakdown of 165.50. Another little cool, factoid: client sentiment, right? From Daily FX, data is showing that traders are now net long on GBP JPY for the first time since February of this year, when GJ traded at 159. So this could be like kind of a blessing and a curse, just because market sentiment is that we're supposed to be bullish, which would be a perfect scenario for a reversal. But once again, with the fundamental drivers around JPY, basket, and the Bank of Japan and what they're doing around printing money, this whole thing, it does add a bit more conviction to getting into buys. So once again, only two scenarios where I would buy at 166 and 167 sort of area, 166.80 sort of area, and then the bearish one where I would get in on breaks and retests of 165.50. Hope that makes sense. So getting into gold. Oh, not GBP and ZD. Let's go to gold. I want to start on the weekly, just because it makes a bit more sense, right? So as I mentioned in my previous pre-market plan, I mentioned that I was going to want to see price build a base on top of 2,000. Otherwise, we're going to be making a move into like 1,900, and it looks like we're doing the latter, right? As we can currently see, we're reclaiming the 2000s and 1990s sort of area and making a move lower, partially because there was a small pop early in the week for the dollar. But with the current state of the dollar, I mean, everyone and their mom knows it, right? That the dollar is going to continue to weaken because of the Fed rate hikes and how we're trying to get a handle on inflation and this whole thing. Just the overall sort of macro sentiment is that the dollar is going to continue to weaken. But with that, I mean, everything retraces, so I'm not going to rule that out. And just the way that the weekly is looking for gold, I would now rule out a potential move into 1934, a potential move into 1900, right? So let's take a look at it on the daily. As far as local levels are concerned, 1956 is looking like a prime area for a retracement, for a retest, before any sort of move higher. With that as well, I would say that 1950 or 1959, 1960 is sort of a bouncer break level in the short term. Because if we lose 1960, obviously we have to play it level to level into 1900 and then potentially 1868. But overall, right, just technically speaking, 1960 is a structurally sound level of now new form support. Looking left, it's been used as resistance once, twice, 3 times. It would make perfect sense for us, obviously, as we built the base back here in late March, it would make perfect sense for us to come back into 1960, build another base, maybe consolidate just a bit, and then make that around the bottom to bounce back up into even local highs or 2077 type of thing. That's what makes the most sense to me. Either, again, bullish scenario, we build a base into 1960, and see around the bottom, reversal, or not reversal, but a push back into the 2000s, or we lose 1960 and we move into the 1900s. That just makes the most sense. We do have a sort of a swing low to swing high 618. Oh, let me move this up here. Swing low to swing high 618 around the 1900 level. So adds a ton of context. Just again, when we look at it from the perspective of if we lose 1959, we have to make that move into 1906, playing it level to level as always. And so it does make a ton more sense on the 4 hour. And this is something that's just extremely clear to me, at least. As we can see looking left, right, we have a very clearly defined uptrending channel, everything else. We also have higher highs and higher lows being formed. We have we have a high, higher low, another equal high, still a higher low, higher high, higher low, and now we have another higher high at the sort of 2050 area. Problem is, we have not made a new higher low. We've made another low, right? We have this higher low here at 1980, sort of 1990 sort of area, but we have lost that level. So for me, at least, we've also turned 2000 into resistance. We've also broken and retested the ascending channel. That's looking like a structural reversal as far as I'm concerned. Typically, a lot of people say that markets move like an upside down martini glass. So you get the big move up, sideways movement, and then down, and then obviously other side of that, downward movement, sideways, and then up. So we're seeing we're seeing the primary, I guess is the term, in that we're seeing the push up, move sideways, and move back down. We've turned 2000 into resistance. And as far as I'm concerned, especially being that I play these things level to level, 1960 is the most likely level, most probable level for price to move into. Once again, as I mentioned on the daily, 1960 is sort of a bouncer break level for me. Just because, again, as we've seen looking left, we have sort of built a base around 1960 and everything else. And obviously we've used it as resistance in the past. It would make the most sense to flip it, if we are going to flip it, into support. Excuse me. If we lose that level, though, we have 1932 to worry about, and then 1900 thereafter. If we lose that level as well, I'd probably wait till 1865, because that's the most structurally sound level for me. I might consider 1910, but again, I feel like into this coming week, we're moving into 1956. I'm of that sentiment, right? The only way I'm going to get bullish again, or I'm going to get back into longs, is a reclaim of the 2000 level, or the sort of 1990s. And so the 1 hour adds a ton more context in that, right? So we have this very big level of liquidity, this sort of SR zone. We can look left and use it as support, resistance, everything else. So this is a very big stopping point for price to sort of pick a side. We also have a descending channel here as well for price to break out of potentially. But something that I do want to remain cognizant of is this local 618 at 1990. And so as far as I'm concerned, if I'm wanting to get long here, I need to see well-defined strength above 2000. I was going to say 1980 in my pre-market analysis, but that's just not enough for me, unfortunately. Especially with the way that the 4 hour and the daily are looking. I would need to see well-defined strength above 2000 for me to really be convicted in taking longs on gold. It just doesn't look good to me. And so with that, I'd rather just wait it out than get burned. Because the other scenario for that is, again, we get the push into the 618, break back down into 1959, or if we lose the local level at 1968, even more so confirming the movements in 1959 and lower than that. And these kinds of things can get messy. So I would want to wait for a structure to shift back into a bullish sort of scenario around 2000, reclaiming those levels and moving higher. As we can see, looking left, we did get a move into the 1980s, not as low as necessarily 1960, but it wasn't until we got that obviously break and retest on 2000 that I was, in my plan for that week, I was wanting to get long. Let me bring this over here. Okay, awesome. So I hope that makes sense. Overall, once again, I am wanting to wait for the reclaim of 2000. Very, 100% we can get the retest of 2000 and move lower, which that makes perfect sense, especially looking at it on the 4 hour. We've now turned 2000 into resistance. We try to turn it into support, reclaimed it as resistance now. So once again, I'm wanting to wait for that level to be found stable, break into that range high, make it into support, move higher into the 2032s and everything else. Otherwise, I'm pretty set on this move into 1959. Like, I'm fine with the move into 1959. I would take buys on 1959 if we found stability there. I would not be taking buys on 1969 because this is sort of a range mid now, right? We have the range high at 1982, range mid at 1969, and then the range low here at 1960. Again, and then we obviously on the outside of that, we have 1969 as the range low, range mid at 1980, and then the range high at 2000. So I'm going to want to see a reclaim of the 2000 level here. I'll even add an alert for my future self. I want to see the reclaim, building a base on top of 2000, break, retest, and higher. And then outside of that, I mean, as far as I'm concerned, right? Another sort of safe buying area would be this 2015 area. We have a local high here. I would take buys on strength above 2015 into 2031 and higher than that. But other than that, I'd not be wanting to get long anywhere else other than 1960, 1959 sort of area. Once again, I'm waiting on a reclaim of the 2000 level, break, retest, and higher. I would consider the 2015 buys on strength, and I would consider 1959 if we build a base on top of it. I will not be trading the range mid at 1972, unfortunately. And I'm going to want to be keeping an eye out on this local 618 because we are currently shifting structure into a bearish scenario, as we can currently see on the 4-hour. We've turned 2000 into resistance. So obviously adding in the 1-hour and 4-hour sort of context, I would want to see strength in the 4-hour above 2000 here as well. Something like this, something along the lines of what we got here, something along the lines of like an engulfing candle like this. I want to see strength overall above 2000 because as it currently stands, I can even draw a little line for my future self. It's not looking good for gold longs just yet. So either, again, one or two things. I wait for the 1959 tag, break, retest higher, or the 2000 buys on the reclaim. So I hope that makes sense. Just to kind of sum everything up once more for my future self, just kind of keep it simple and clear as I always do. I'm wanting to wait for either the 1959 retest to get long. If we lose the level, I'll just wait for a price to find a base either at 1937 or lower than that before the bounce, because again, I'm long-term short the dollar. So it only made sense to want to get long only when we find stability. Other scenario, I wait for the break and retest above the range high at 2000 in confluence with the 4-hour as well. I want to see strength on the 4-hour. Or the third scenario, I'll play it safe and play the break into the local highs at 2015 on strength. Hope that makes sense. Going into GJ once more. Once again, I'm still bullish above 166. I would take buys on the break and retest of 166 all day, every day. If not, I'm pussy. I would not take buys below 166 though, and I would not take the sell from 166 to 165.50. I would rather wait for the bearish scenario on 165.50. In that, I would take the sells on the break and retest of 165.50. Another area I would potentially consider for buys is the 166.80, 167 sort of level. Obviously, looking left, this is a sort of local SR zone. So we could potentially build a base early into the week or get knocked back into 166, retest, build a base and higher into 168. And those are just all things I'm going to want to be monitoring into this coming week. So once again, one more time. 166 buys all day, every day. I consider the buys at 166.80, 167 area. The only time I'd be bearish is below 165.50 on breaks and retest. I would also consider the reversals at 168 as well, just because it's such a well-respected level of resistance. A level of structure overall, as we can see on the weekly. So I'll be on the lookout for that. I feel like we have to hit 168, even if it's upward creation into the coming week. Even if we're gonna reverse, we still have to hit 168 as far as I'm concerned. Because look at all these candles, right? Like there's not been a scenario where we have not hit 168 on, or at least moved into that direction on multiple occasions. Especially now that we're having solid bodies into this level of resistance here as well. So those are all things that I'll be taking a look at and considering and observing and monitoring and, keeping track of into the coming weeks. So that pretty much sums it for me, future me. God bless you, bro. Hope you're living to your utmost potential, making shit happen. Life is hard, but you're harder. And just make it happen. Never take your foot off the gas. God bless you. God bless everybody watching, and take care.